All right, folks, can you hear me? Just give me a response back to that tweet I just posted. I'd appreciate it if you can hear me. Everyone that's asking to speak with me, I'm going to ignore your request respectfully. I don't know what I'm doing on this thing. it's just trial and error. All right, is the audio clear? And is the volume good? Thank you, J-Rod. Awesome. All right, so give me 1 second longer. I appreciate your patience, but it looks like it's going to be pretty quiet this morning so far. There's no real news to speak of, and just give me a couple more seconds to get my charts where I want them. All right, so if you watching live or listening live, I should say, if you take a short opportunity, that example was hopefully insightful to you all. A lot of discussion about what was shown in my tweet yesterday without really going through it. A couple beta males out there chit-chatting, not really picking up on the narrative. But this is the invitation. I'm just going to place this in the beginning. If all you out there that are like educators and want to be gurus and traders and stuff, why don't you start showing your statements so everybody can know you can trade too? Because I think it's been raised up now. The bar's been raised. Saying you took a trade and talking about something doesn't work anymore. All right, so I believe because we have no real news this morning, think about what we have seen this week so far for the index futures. The big smash down day we had on Wednesday, the outside day with the down close. The fact that we didn't take out May 12th's low. I don't trade the Dow. Okay, I don't trade it, but I do incorporate it with my analysis between the three averages. So anyway, the point is this. We had a big smash down day on Thursday, outside day with the down close. Generally, I like outside days with down closes when the market's bullish. Now, let's say this market has been going up, okay? And I think we have a little bit upside this morning. Let me just preface it by saying all that. I don't think there's anything to do at the very moment. I want to see what we do at 9:30. I'll probably hang out with you until around 10 o'clock, and then I have to escape. But, I'll try to talk with you about some things that I think may be useful to you, and also review what we did yesterday a little bit more detail. But the idea of an outside day with a down close, if it's bullish, I teach that pattern is a setup that's usually bullish that goes into the next few days after that. Because we have been going lower, we've been going lower into May at the seasonal tendency I outlined in the mentorship on YouTube. Now, you've all watched that transpire. So if we look for days that have outside day down close in a market that's bearish by itself, it just means it's likely to continue lower. But if we are met with what we have here, we are at the end of the week. Thursday we had a mixed day. Didn't really continue going lower, didn't make a new lower low. The three averages have not confirmed one another with the lower low on the daily chart. So if it could potentially be a very lackluster trading session. going by face value, looking at what we have right now. But obviously, all that can change at 9:30 when the equities market opens up and things start getting moving around. So we'll see what we get in regards to that. But I wanted to kind of like roll back a little bit on the discussion with yesterday's whole entire day. The whole point was, and for those that have actually been with me for a while, you know this to be true. And even the folks out there that have my mentorship, whether it's been by hook or by crook, you know what I say in that mentorship. I talk about how on big down days or large range days, big ranges beget small ranges, and small ranges beget large ranges. I learned that from Larry Williams, and I think it's a truism. It's going to never fall out of style. It's real. When there's a lot of excitement, when there's interest in a market, that's when everybody else feels comfortable going in. And I don't want anybody to take one or two of those tweets that were given yesterday, which I obviously assaulted most of you. That's not my intention with the Twitter, but I made an attempt to walk you through a day, which I guess in retrospect, looking at how, I guess this is a lot easier, but I wasn't confident that I was going to make it work. So I had my son next to me, and I was going to just basically translate what I was giving him with you. So if I've given you a lot of tweets, or you're wondering like, man, what did I sign up? I'm not going to continuously do that, obviously, but the session yesterday was really geared towards how to avoid blowing your, focusing on the real manipulation and the move. That while I don't trade the Dow, and why don't I trade it? It's, to me, I think it's a little too sloppy. It's erratic, and I'd prefer to be in S&P. S&P will have the cleaner price moves. NASDAQ, if I'm in an idea that is parabolic, in other words, I think the market's really going to run, I think it's going to really take off and have a big range day, I want to try to trade in the NASDAQ because I want that, because it tends to exaggerate everything when it's a big move. Other people may say, well, I'm not going to trade the NASDAQ because it's going to rip my face off and I'll slow down and go into the S&P. I'm not like that. And you've seen me do that. I've done it with live trades, live account. I'm not afraid of that. You won't be afraid of it either, but it doesn't mean it's an invitation for you to go out there and risk live money. And everything I teach you should be viewed in the context of paper trading and demo. But I've kind of like wanted to go into this year, like I mentioned last year, of trying to prove to everyone that there's no reason for you not to go in and look at this stuff on your own and see it for yourself. But invariably, when you do these things, like Murphy's Law, whatever can go wrong will. And as a new student, it's very easily found for a new student to be discouraged because of initial adversities. And if you started, like, for instance, if say you signed up for this whole business of ICT mentorship, ICT concepts, smart money concepts, whatever, and you started learning yesterday, that is going to be a huge hurdle, and it's going to create a lot of doubt and confusion because the intraday range was choppy, it was sideways, and that was more or less what I was walking you through. Go back and look at the tweets and you'll see that's